What is going on, traders? In this video, I'm going to go over some key levels that you should look out for this week. Also, I'm going to give you guys somewhat of a bullish scenario. Before I get into that, like, subscribe, comment your thoughts below. Let's get into the video. Now, in my last video, I sounded pretty bearish. And I will say I'm more so 60-40. And when I say bearish, I mean, I'm just looking for a dip in the market. I'm not extremely bearish. I'm not looking for a crash or anything like that. I'm just more so looking for a dip in the market. And I think I made it clear that that dip is possibly going to happen between Monday and Tuesday. If not, on the news Wednesday and Thursday. And if you don't know, Wednesday we got GDP news at 8:30 Eastern, and then Thursday we got the big guys. We got core PCE data and unemployment claims, and then we got a bunch of Fed members speaking on Thursday. I want to make it clear once again that this week you should be very cautious trading. And me personally, I'm going to be cautious. I'm going to be cautious. I'm going to be sitting on majority cash. Any puts I have, they're all long-term puts, and any calls I do take, they're pretty much going to be short-term calls. And I'm pretty much hedging my account right now. But you do what you want. I'm just I'm just the messenger. I'm just here to let you guys know what to look out for and what I am doing. So as far as NQ, as far as Nasdaq, looking at the upside, we will obviously want to see a break and hold above 18K. If we break and hold above 18K, we're looking at a move towards 18,150, which is our previous highs. We break above 18,150, then we're pretty much in price discovery mode, and we're looking at a move towards our psych levels: 18,200, 18,250, 18,300, so on and so forth. As far as downside goes, downside, you want to see a break and hold below 17,900, 17,875, give or take. You break below that, you're looking at a move towards 17,800, and then after that, you're looking at a move towards 17,700. Now, once we start breaking below 17,700, this is where it gets tricky. I always tell you guys in other videos that wicks tell you where buyers and sellers are. Now, I know that sounds like a no-brainer, but a lot of traders tend to forget that. They just see wicks and they draw their key levels, they draw their supply and demand zones, they draw their trend lines, and then they go about their day. But it's much easier to trade when you start saying out loud to yourself that, hey, this is where buyers are and this is where sellers are. So, for example, right here, in order for us to break higher, we want to stop these sellers out of their position. So basically, we start breaking above 18,150. We want them to close out of their positions in order for us to go higher, ideally. So that's how I look at wicks. That's how I trade wicks. Downside. As far as downside goes, again, once we start heading towards 18,150, I mean, not 18,150, we head towards 17,500. There's a lot of buyers down here. There's a lot of turbulence going on down here. We got buyers here, we got buyers all the way over here, we got buyers here. These guys are probably gone by now, but still, we got buyers all down here. We got a lot of turbulence in this area. And in order for us to, I believe, personally believe that in order for us to break below and get rid of these buyers, we need a news catalyst. That news catalyst can happen overnight or tomorrow. I personally don't think that's going to be the case. Or it can be Wednesday or Thursday's news. And I'm not saying Wednesday or Thursday news is going to be exactly bad, but again, I just want to reiterate, in order for us to get rid of these sellers down here or even get through all this turbulence here, we need somewhat of a news catalyst and a bad news catalyst, to be clear. In order for to get rid of these guys up here, we need a good news catalyst. So I want to make it clear that, again, be cautious. Be very cautious this week. Looking at the ES. ES, pretty much the same deal, right? I wanted to see a break and hold above 51.05, 51.08 on the ES Friday. We didn't get that. So right now we're at our next key level at 50.90. We break and hold below 50.90, which is in this range here. Then we're heading towards 50.80. After that, you're looking at a move towards 50.70. Your main key level that you want to look out for is 50.44, 50.45, give or take. After that, 50.29. If we break below 50.29, I do think we're heading into real bearish territory. But again, just like the NASDAQ, down here at around 49.80, 49, 49.70, give or take, 49.60, a lot of buyers are down here. And if we just so happen, and I wanted to pretty much point this out on the NASDAQ, but I didn't. But if we just so happen to head down here before Wednesdays and Thursdays, we could get buyers stepping in and we could get possibly good news and then we start heading back up again. Now, how high? I don't know, but that is possible. But if we just so happen not to head there right away, then it may not look good. Okay. Again, I don't know if the news is going to be bad or good. I'm just giving you guys scenarios to look out for. Now, triple Qs. Triple Qs, you got a double top, and then you have your neckline at around 421. We break below 421, you're heading towards 417. 417, you break below 417, you get 413.5, 413 around this gap fill right here. After that, it's 409, and pretty much there's just a bunch of gaps down there. Now, the double top isn't yet confirmed until we break this neckline at around 421. But if I wanted to give you guys a bullish scenario, if you wanted to be bullish, if you're looking for a bullish opportunity, there is hope. We could head down here towards 425 on the triple Qs, 424, give or take, and form a head and shoulders pattern, inverse head and shoulders pattern. You got your shoulder here, head here, another potential shoulder here. And then you break back up and you get back into this rising wedge pattern. And then you start heading towards 450, 470, give or take. And why I say 470 is because it's pretty much at the top of this wedge here before you break down. So that is another scenario. If you don't believe me, we can look at the SQQ. SQQ, pretty much the same thing, but inverse. And if you don't know, SQ does exactly the opposite of what the market does. If the market goes up, SQQ goes down. If the market goes, what did I say? If the market goes down, then SQQ goes up. On SQQ, you have a double bottom pattern. You have bottom here, and just like the Qs, triple Qs, you got a gap fill. And your neckline is around 1250. You break above 1250, then it's safe to say the market is pretty much just plummeting. But again, you have a potential head and shoulders pattern forming here. You got your head here, you got your shoulder, your shoulder here, your head here, and then a potential shoulder here. So hopefully something's clicked there. So hopefully something made sense there. Whereas the triple Qs has a double top, the SQQ, which moves inverse of the triple Qs or the market in general, has a double bottom. So hopefully we're putting two and two together there. Okay. But again, if we wanted to be bullish, there's hope and there's potential for a head and shoulders pattern on both the QQQ and SQQ. VIX. I said I don't think a real correction is going to happen until the VIX fills this gap at 13. Now, I'm not saying that immediately it fills the gap and then, oh my God, correction happens. Everything's going to bomb. I will say that the VIX, I personally think it's pointless to plot on the VIX. I think it just does its own thing. It's just nothing but volatility. I honestly don't think there's a point in plotting this thing. It has way too many false breakouts. It pretty much it's pretty much a guide to see where the market is going or potentially where the market is going, in my opinion. I think you have a better chance of plotting the SQQ. But if we're looking at the VIX, if we fill this gap at 13, let's plot this out for you guys. If we fill this gap at 13, I think it can be bad for the market. If we fill it right away. So if we start filling it tomorrow, whatever the case may be, I think it's going to be bad for the market. Now, that doesn't mean that we fill this gap and instantly bounce. We could continue to go down. We can head all the way down to as low as $9 on the VIX, in my opinion, which will be good for the market. We see newer highs. We see that QQQ hit 450, so on and so forth. If we don't fill this gap right away on the VIX, and let's say the market starts to plummet tomorrow and the VIX starts to head up immediately tomorrow, all this week, that could be bad. That could mean that the market is preparing for a huge correction to come because we're leaving this gap all the way down here at 13 open. So that means that potentially means that the market is preparing for something bad to happen. If we immediately start to head towards 20 or 19 prior to Wednesday or even Thursday, before this gap is filled, I would be very cautious. I would be very, very cautious. I probably wouldn't even touch anything. I think it would be bad, personally. So that's really what I want to get through to you guys. Be cautious and look for these scenarios. Honestly, I think the VIX will tell you the story heading into tomorrow. I think it will tell you exactly what you need to know heading into tomorrow and Tuesday. If this gap doesn't get filled right away, I think it's going to be bad for the market long term. But if it short term, obviously the market will drop if the VIX just goes up straight from this gap. If this gap gets filled right away, I mean, obviously it's still going to be bad short term, but it's going to be good for the market long term. Where long term we see this gap filled, maybe we go further down, whatever the case may be. Either way, be cautious, guys. Pay attention to the VIX. Pay attention to these double bottom, double top patterns on the QQQ and SQQ. Pay attention to the neckline breaks, so on and so forth. Hopefully, you guys got something out of this video. Discord link is in the description below. And until the next video, traders, have a good one.